Hi, Brett Warren from Metropole. Are you currently holding an underperforming property in your portfolio? Our property markets have reached amazing highs over the last 12 months and many investors have reaped the rewards. Well, that's certainly great news. It has potentially covered up many mistakes that investors could have made without even knowing. The old saying, a rising tide lifts all ships, may well have applied to our property markets throughout 2021. Everyone's looked like a professional and everyone looks like they've got it right as property values continue to climb. But the consensus is that our markets will slow throughout 2022 and many predicting a downturn in 2023. With a change expected, it may be the ideal time to look to offload your underperforming assets before it's too late. I guess the first thing to understand is to understand if you do have an underperforming asset or an inferior property in your portfolio. The simplest way to do that is to compare the math. Understand how your property's performed over the time you've held it, and then compare it to the average for the area or the state you've bought or the city you've bought in. For instance, Brisbane, Sydney or Melbourne over a 10-year period, and how's your property performed against that average. I know that's something we've done in the last probably 5 years for our clients, and consistently performing at 1 or 2 or 3% above the average is a really good sign. Anything that's not performing or performing less than that, I probably have some red flags there. So to start with, that's the first place to start. If you're still considering and wondering if you have an underperforming asset because it's only performing average, or you've held it for such a short time and you're not aware, then potentially it's the time to dig a little deeper. When we look for our investment grade properties, 80% of what we're looking for is the location. We're generally buying in our capital cities where there's a huge amount of demand from large scale employment hubs, and also things like good school catchments and public transport and infrastructure. All that demand's driving while there's very low supply. There's not another 1,000 apartments or another 1,000 homes we could potentially build in that area. Most areas are in fact landlocked. So that's the 80% rule. If your property doesn't stack up to that, then maybe you need to consider looking elsewhere. The remaining 20% gets down to ground level, and this becomes a little bit easier. If you're looking for properties on a main road or in a flooded area, that's probably something you should try and avoid. If you're looking for properties that are on train lines or too close to train lines, if you're looking for properties in large complexes or buying off the plan or things like that as well, there's some serious red flags there and you should look to offload those particular properties. Why should you do that? Well, in my opinion, I think you may be running out of time. Demand levels have peaked if we look at REA's insights from last year. Finance approvals have also peaked during that time. So your pool of buyers are going to get less and less as the year goes on. And if experts are right, by the end of the year, demand levels probably would have dropped off a fair bit. So this is your chance to sell your underperforming assets. If you're still unsure or you want to work out an exit strategy to offload those particular properties, why not engage the team at Metropole? That's exactly what we do. We're unbiased, we're independent, and we're professional property strategists who have decades of experience. We don't go off a gut feel. We have facts and data and numbers to actually help you put a plan in place and put an exit strategy, should we do that, to transition your asset base to get it working a lot harder for you and get your funds working towards your end goal. If you do have any further questions, please reach out, and thanks again for your time.